Right, part two of the watch list heading into Wednesday. We're in currently Asia, Tokyo Open, and inside day so far. Looking ahead, there's no red news on the calendar, so trade as normal. With the Nasdaq, we are failing to break out. We had prospects of a move higher given yesterday's bullish close, as tepid as it was. Um, the opportunity was to be looking for a buy low to continue with that, but it didn't play out. Instead, we got a failed breakout and a move in. So that's fine. We shorted the breakout and bought back at the 15, 15.52 level. And this was engineered on the back of the strategy that we're looking into currently. But as per the typical day count, it didn't play out. Nothing was to be done. We didn't get a break of structure. We remained on the front side of the trend. We came down, consolidated. There was a pre-New York Open sell-off, and that tested the prior week's lows, actually broke through the prior week's lows, and then later in the day was the opportunity to buy low on a lower time frame for the short squeeze on the day. So looking ahead for tomorrow, we are potentially coming back in on the sell-off. You've got the week highs as a target on the upside, or we remain bearish if we stay front side of the trend. Moving over, coming over to US 30, we are on the second day here, so we had a failed breakout of this week's low, and last week's low as well. We've pushed up, we've broken structure. That trend line now is a counter trend line. We are looking at this point for a move back up to the other side of this range and for a continuation. So come out to the 4-hour chart, get a better perspective of what's going on. So we failed to break out on the downside, and we could be building for a move higher. And we'll just take note of the trend line over there. It's a dominant trend. So we're coming out of level 1 into level 2 of this range. Ideally, we'd like an opportunity again down here to come up. It's less likely on day 2, 3-day cycle, for that to occur. More likely that we're just certainly not below the lows, but potentially back into this length. We will need to see in that respect to the structure down here broken. I'm just eyeing it currently. Go down to the 5-minute chart to see what kind of structure we have that we want to See hold for a move up or break for an opportunity to buy lower. So let's go to 15 first. So right down in here, and then here up on the 5 minutes. Same area. It's in here. It's been building, 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 creeping lower. So that's broken structure. Might get a continuation to the downside. Capped at the moment in Asia by uh, Tuesday's closing price. So that's officially a broken trend line now. So is this a top resistance? Meanwhile, resistance in any case. Prospects of a move lower. So keep an eye on that, how that pans out over Asia and London. Perhaps we come up again, lower, and we'll be set up for the drive higher for the US session, or a combination of London and the US. Okay, so back to the hourly chart then. Prospects of a sort of scenario. So buy low, continuation perhaps. S&P, similar scenario, fell breakout at the lows of last week and this week. Inside day on Monday, stops up high, stops below. Longs in the money, potential long squeeze for the move up in towards stops over here, W formation, back down on Wednesday. Back down on Thursday, I meant, not Wednesday. And we'll note as well that we're making lower lows, lower highs. So we are in a downtrend. Are we about to snap that? Is that a failed breakout? It's going to be the straw that broke the camel's back, basically. So on the backside of that, coming up, coming down, and then heading back up into shorts, perhaps. Or this is just a continuation. Maybe not even coming up as high as that swing high. Anyway, we don't know. We're not here to predict. We're just trying to plan to succeed. Yeah. Okay. So yes, that's prospect of either a continuation or we're going to stall. And if we stall, we might get the opportunity to be buying low within the session that we're trading. Right, dollar Swiss looks like it's trying to head higher, doesn't it? In this correction, I think there's some juice still in this, still some way up from that old support over here, and we're embarking on the 50%. Maybe some juice up to the 61.8. On the lower time frames, we can see that the price has been failing to break out. So Friday was a failure both ways. Monday broke down again, come back up on the inside of that drop, so come back up. We're building bullish structure all along this trend line. We broke the bearish slope on Tuesday. We've come up and failed to hold above Monday's highs. So this is day one of shorts in the market. Will day two be a picking up the longs? We'll have to see. Theoretically, day two, you'd expect a continuation of those shorts that have come in, driving the price back in from the high of this week. So we failed to break the high of this week and hold above it. So let's consider now as resistance. So if the thesis for a move lower based on those shorts coming in, we'll need to see a break of Tuesday's low, 87.20. In fact, maybe even as high as 87.33. So we can just illustrate this. That was the low that drove the price up to the highs really, for a swing point down in here. So this could be quite a potentially strong demand area. So we're bullish above, bearish below that. Dollar yen. So we caught this on the swing trade and we're targeting higher up into towards last month's highs. Minus 272 up at 144.55. We've been talking about that for quite a number of days now, and that's a trade risk. running in the money at break even. But in terms of the weekly template, if we remove that, we can see that we had a failed break of last week's, or this week's, no, so that was a move up Monday. So Friday was day 3, turning to day 1, 2, 3. This is turning up to day 1. I apologise. This was day 1, day 2, day 3, day 1, day 2. So this is in fact day 2. Dollar yen. If we look at last week, we had a failed breakout at last week's high. So last week's highs were up here. We came up, we failed, we dropped. So day 1, day 2, day 3. Monday flips back to day 1, day 2. And we're looking for a sell-off in day 3 back into longs. So that's quite a simplistic looking setup. And so we're looking to sell high within our session. And the current structure is down at 142.83. That's the highest low before the current high that's been printed. And we're looking for a potential move up to come short, or just simply a drop and a continuation lower. So euro yen, just on the day count, we had last week Tuesday failed to maintain the bid above the highs, because the following day we came in. So we had day 1, day 2, day 3, Thursday turning day 1, inside day doesn't count. Day 2 on Monday, day 3 coming back into the day 2 shorts, longs, makes sense. And then that leaves us for day 2 on Wednesday, the prospect of a sell-off continuation with the shorts that are coming into the market again. We've got stops below here. So these stops here were broken, taken out with this move lower. We've still got money down below here. We move towards last week's lows. If we pull out to the daily chart, you might see some confidence in that theory, maybe not. Got a lower high here, so you've got bearish case while staying front side of that market, that bearish trend. Or, well, we haven't broken these highs. I was going to say we were coming up to carry on, so impulse correction, bullish impulse, but I would have been more convinced on that thesis if this high closed higher and pulled back on the inside to continue up. We've closed lower, so that's euro yen. Sterling yen is a bit more tricky, but having spent some time on this, I would argue that, again, this is biased to the downside. We've got this break of structure, so we came up, so we broke over here, and that move up on Monday, breaking out of the inside day highs, and we have created structure here on the upside for a continuation, breaking these prior lower highs, and that schematic there. Come up, so we've taken that out here, taking up breakout traders to pull back on the inside. We failed to hold, created now a lower low, come back up in to test this potential strong high that might prove itself and lead to an almighty sell-off. A day two continuation trade. First day of shorts coming in despite closing up high. Still within the week's range. So let's see if new shorts come on. We've still got shorts in the money with their stops. Haven't quite squeezed them out entirely. The majority of it, of course. So let's see how that pans out. It's not jumping out. Currently there's a stronger setup as Euro and I'll leave it off the watch list. This, in fact, is actually a day three setup, so I'm changing my mind on this. This was the first green day, the low of the week, on Monday. Day one, day two, so day three sell-off. So day three sell-off, looking to sell high, or the continuation trade, depending on things how things pan out over Asia and London. Coming over to gold, we've got inside day stops up high to target. This is something we mentioned in the prior watch list New York close. And we talked about this setup, which has started to play out already in Asia. We broke this week's lows. And are we going to fail? Regardless, this is day one. Tuesday was day one, a 3-day cycle. And Wednesday is day two. So we've got longs coming in the market, guarding these lows and this support structure looking left. Then we could have a day two continuation and a day three continuation on Thursday around the CPI data, or a third day of progressive highs, if indeed we manage to break the backside of this trend line. Other than that, we're front side, so it's a risky trade. We're trying to move into a falling knife scenario with broken structure, continuous lower highs by the looks of things, despite breaking up, closing up high on Friday and Thursday. Okay. Right, dollar CAD, we did well on that on Tuesday, made our money on that sell-off, and it's come into a potential support, dynamic support area. We haven't broken any structure on the inside of this move yet. Over here, the actual low, the swing low is down here, but there is structure over here. It's a mixture of last month's highs, around about Monday's highs, the opening range on Monday high as well. So bound to be stops down here. To break of that support line could be a sharp move lower. The question is, are we going to come up into those shorts? So day one shorts from the market. Potentially. So with the Canadian dollar, the thesis is that we've broken structure and could be coming up to come down. So a long squeeze, dump, pump, then the dump of the pump in to test um, well, you've got Monday's opening range highs, you've got last week's highs, you've got last month's highs, you've got stops all below here. All of this is in the money, so it's feasible that this would be expected to implode and continue to the downside, but we might have to come up to see that over the course of Asia and the London session. Or maybe we're just going to come down, maybe we'll rally in London only to come back down in New York, we don't know, but the thesis is to sell high or catch the trend and continue sell into the trend. The euro, we could be on the verge of a move up towards stop territory, liquidity to get up there above this trend line, perhaps squeezing shorts. Maybe this area here will act as a resistance, taking on this structure here at the moment. Maybe we'll get a pop higher, maybe we won't. Maybe we'll continue up. But I'm building a thesis that will come up to come down, take out these stops below, maybe even make a fresh low for the week. Or we're just going to continue up. Or go sideways. We don't know. But that's the thesis for the moment. So this is day 2 of a 3-day cycle. We are in between last week's range and moving towards the midpoint. Anyway, I'm guessing here, we'll have to wait and see. This is not jumping out at me. It's something that I'm really that interested in at the moment. We'll see how the rest of the day shows up. But looking to buy low, if anything. Again, there in the dollar for the day ahead. And finally, we'll look at sterling to wrap this up, as the others are correlated. We've covered commodities with CAD, New Zealand, and so forth. So the pound is still above these swing lows, but it's slightly more complicated as we move in. We are breaking structure here. This was a lower high. It looks as though that this was a weak low. So there is a bearish bias while below this structure. If we can get above that structure, then we can take on the counter trend line resistance for the continuation to the upside. But that really is the only pair that I'm seeing that's in contrary to the bearish dollar thesis, really. Yeah.